Hey, Money Vikings, thanks for joining me on a walk today. And I'll spin around so the sun isn't in your eyes. But anyway, I wanted to give a couple of thoughts on current conditions as we go for a walk. And number one, wanted to talk about the importance of an all-weather diversified portfolio. I'm more and more convinced over time that is the right strategy for me. I want to talk about inflation defense systems, and then I want to talk about housing. So the first one is about portfolio construction. So there is so much confusion out there, and the media and the market. So every day you always have to remember that on a daily basis, the market is a crazy, strange thing, right? So the classic, Warren Buffett quote is that it's Ben Graham, is that the market is on a day-to-day or in the short run, it's a voting machine. Kind of like America's Got Talent or one of those shows. Everyone's just voting, right? But in the long run, it's a weighing machine, meaning that it's weighing the strength and the health of a company and it's adding value. So day to day, we really have to discipline ourselves to ignore a lot of the market noise and not make rash decisions. The only reason to pay attention to day to day is if you're doing some options trading or some day trading, which I don't do a lot of that personally. I like to do more, look at overall portfolio construction, invest over the long term. And there's not going to be any perfect here, right? So investing is never going to be perfect, and investing always has inherent risks. But we just have to learn about how to balance our portfolios in a way that aligns with our sort of natural temperament and our overall goals. So that's just really the critical element there. And I would advise people to pick up a few books and research it. Check out the Money Vikings book, Conquer Financial Freedom. It's on you can click a link on our website, on our blog, and pick up a copy for a couple bucks or something. It's not a big deal. But it has a lot of good information in there about building wealth. So that's what I wanted to share with you guys on that aspect. But again, every day as you just hear competing things, and it's just another day of doom and gloom. Is kind of one day the market is just super excited about some jobs report or GDP numbers or whatever, or inflation's coming down. Maybe, who knows? Doesn't seem like it's coming down fast enough. But anyway, long story short is that we've got to be able to block a lot of that out, because if we're making just like all these just like constant moves and decisions about sell this, buy this, day in and day out. First of all, I don't really think it's a life of true wealth. I don't really think it's that enjoyable. And I actually just don't think it's effective. So really want to look at, long-term portfolio construction. And again, I always try to reiterate these things so that they really stick with people. The idea of an investment portfolio is there's not a magical day where, let's say you, over your career, you get $500,000 in there or whatever it is, or 300,000. There's never a day where you're just cashing that thing out and you're done. Like, it doesn't work like that. You're essentially creating a system for passive income where you can draw, a certain percentage, maybe 3, 4, 5, 6,000 a month off of it over a hopefully long period of time, hopefully over a 15, 20, 25, 30 year period. So just keep fundamentals in mind, keep the long term in mind. So on that front, I'm still long-term bullish on the US. I definitely sort of believe in what Warren Buffett talks about, where never bet against the US. Are we going to have some problems? Yeah, every place is going to have problems, because that seems to be the nature of things. But at the end of the day, we're going to be fine. So, strong American businesses are going to do well, I think, over the long run. And I always love the concept of something like an S&P 500 index fund that's self-cleansing. And what I mean by that is, the weaker companies drop out of it over time, and the stronger companies stay in. So anyway, is it high? Yeah, maybe it is. Maybe it'll drop. Who knows? But you got to be looking 5, 10, 15, even 30, 40 years out. And again, there's no perfect. There's no sort of one way to do it that is going to, be the maximum return. I think the important thing is to take advantage of some kind of return and some kind of compounding ability. I think those are the two forces that'll really help. So anyway, check out our Ride Your Bike portfolio. I think you'll find it very informative, but I just go through how I structure my portfolio in there. And that's for me. I'm just sharing what I do. It's diversified. It tries to be practical, try to keep costs down. It's not trying to be too fancy with anything and do this, do that. Will I make adjustments? Yes, I'll make adjustments over time as I see fit, but I'm not going to do anything, radical with it. So I think that might be really pretty helpful. Second thing I want to talk about, it's really critical at this juncture. Happy fall, by the way. We're in October, and please like and subscribe if you don't, if you get some value out of our content and our blog, would really appreciate it because it helps us keep motivated and grow the channel, and it's just a lot of fun to build a community. So thank you. But I want to talk about inflation defense systems. So we have a blog. I think I have a YouTube video out about it, and there's also a article I did on it. But we've been implementing inflation defense systems for quite a while now because inflation's been pretty bad for a while. So interest rates getting jacked up. Clearly they're trying to go for a soft landing here. I think it's a very hard thing to do. Something in the economy tends to break when interest rates go up so much. So we're probably going to be, seeing something break. But that isn't something to fear either. That's just sort of, be prepared, but at the same time, keep the long term in mind. That stuff happens. So we've survived it before. We've seen it before. It's not really anything new. We've been through crazy housing crashes and recessions, etc. So we'll see. They're just going to continue to pull the levers up and down and try to guide things in some certain way. But for an individual, for all of us as individuals, with wealth building and just trying to live a great life, inflation defense systems are really critical. So finding areas to cut back on, finding bargains, finding discounts where you can, buying in bulk where you can, limiting maybe some of the extravagances, but just cutting back on things in general is probably a really good idea, in my opinion, in a lot of ways. So, getting those credit cards paid down and all that stuff. So there's more detail on that in our article. So the third thing I want to touch on today in this post is housing. So housing market still seems to be kind of a conundrum, right? Because prices are just still pretty darn high. I don't know. Some of these areas you're like, how is this possible? But with the interest rates going higher, which they're actually not historic. What's ironic, the interest rates are not historically high. The issue is supply and demand. There is just not enough housing for the number of people where they want to live. And so you do see a lot of people moving to lower cost of living areas if they can secure jobs, which they probably can right now. But I would just be a little bit, I don't know what the word is, cautious about housing in general. So owning is overall extremely expensive, as people know. I do believe in it in the long run. I think owning a piece of your community, owning an asset is still worth it. But it can't be thought of as a quick, thing. It's not a quick thing. It's not a quick buck. It's mainly a place to live. And there's the whole concept of pride of ownership and all that. But, interest rates are pretty high. So it's really it's really going to soften a lot of those numbers. So, negotiate, I would say, right? That's the point of things. So the market is going to bear what the market's going to bear. It's a free market system. And you're a market participant, as am I, and we all are. So as a market participant, where you put your dollars is a vote. So, just keep that in mind as we're going forward. But yeah, with that, just a couple of thoughts, and please leave any comments or ideas you have about how to sort of quote unquote survive the current environment, because it definitely is a challenging time in a lot of ways for many people, no doubt about it. So again, that's why, we invented Money Vikings as a way to bring together great ideas to build wealth and live a life of true wealth. So yeah, with that, have a good one and enjoy the weekend, and we'll catch you on the next one. Take care.